Okay, this is the pullback trading bot that I built. So a pullback is essentially you're looking for a directional trade, so a trend down or up, and then you look for a small retrace of the price, and then what we're trying to do is catch this second leg. So you got this down, up, and then this second leg is what we're trying to capture. So this is a live trading bot right here. You can see some of the trades that have been taken, and on the right side we've got my Telegram monitor, so it's updating us in real time if we get a setup. So you might see some of these dots change while I go over the strategy. And then here we've got just the different variables that you can set for the strategy. So the main thing that we do is when we get this trend in one direction, we're looking to use the Keltner channels around that to decide whether or not to enter. So the first thing we're looking for is a trade to close outside the Keltner channel and then pull back within the Keltner channel within about a 20% range around the mid of the Keltner channel. So right here, this would almost be a setup, but it didn't quite break the Keltner channel. So if this goes up on the next couple bars, we might see a trade. So let's go over the variables here. So this is trading on Hyperliquid. This is the perpetual market, and we're trading ETH right now. This is set to a leverage of 25. And then these are the quote amounts, so this is $11. We're just saying we can take one trade at a time, a 60-second cooldown, and we've got some initial stop loss, take profit variables. Those aren't used. Those are usually they do get overwritten when the trade triggers by the controller. So we base our take profit on the size that this leg was. So that's the measured move. If this had actually triggered, this would be we'd look at the pivot point, so the low to the high, and we would use that to kind of estimate where we're expecting the next move to go to. And this is what you would kind of shoot for. I have mine set down at 70%, so the take profit of the measured move is 70.7 right there. Let's go through some of these other variables. You can do this on any time frame you want, so you can use 1 minute, 5 minute, 10 minute, 15 minute. I did build in the option. I haven't really flushed this part of it out, but if you wanted to get confirmation on, say, that we're in a downtrend on the 15-minute time frame and then the 5-minute time frame, and then only then place an order on the 1-minute time frame, that would just give you a little bit more, I guess, strength to the signal that you think that, okay, we're going to continue to go down. Right now, this is just running on the 1 minute, and we're just using only that signal, but it is configurable to add that in. And you can see those are just disabled because they're set to false. And we've got our Keltner channel settings. So 20 period look back with a multiplier for the ATR of 2.25 to set those bands around the mid. You could use 2 as well for the multiplier. It's standard kind of settings for that. And then for the pivot, we look back only 20 bars, so we don't go any further than that at the moment. And so this is a pivot. If we looked at this here, that would be the pivot point. And then for our actual formation of the trade, we need to have a minimum of 3 bars after we've broken the Keltner channel. So right here, we break the Keltner channel, and once we broke it here and closed, but then we went a little bit higher, so it'll use this as the high point, and then 3 bars after that. So this will be 1, 2, 3, and then once we break above this next bar, then because we've got to 3, that would trigger an order. And you can see that we did have a buy because it wicked just a little bit above that. And then we also have a max number of bars, so you can only have 10, and then if the trade is invalidated, and the zone we want it to retrace into the Keltner channel before we take the next trade. I've got that set to 20%, so that means the zone is 20% above the mid and 20% below the mid. So that's one of our triggers to take the trade. And we have a few invalidation triggers. One of them is the pullback near the pivot point. So if we get within 30% of the original pivot, so down here in this example, 30% would be about this far down, then we would just kill the trade. And we've got a little stop loss fee buffer in there, just for the calculations. So we just add that in, pad that in. Once the trade is triggered, we add a trailing stop loss. So this is set to 2, so we're taking the length of the previous 2 bars and using that to set our trailing stop. We use a multiplier of 1.5, so we take the length of those 2 bars, add them together, divide by 2, and then multiply by 1.5. So basically it's just kind of it's a fairly snug stop loss. The initial stop loss mirrors the take profit. So if this was our example here, 100% would be the take profit there. I have the take profit set to 70% of the measured move, and the reverse of that would be down here. So that's where this stop loss would be initially. But then after our initial entry, then we basically start snugging up right to these bars. So it activates after 1 bar, and yeah, that's the multiplier I spoke about. And we also have an early exit. So if we trade trade triggers, and then within a minute, when we check the price, if it's below our current price after that minute, we immediately just cancel the trade. So just basically, if it's not going our way, we get out, and that's kind of what happened here with this trade. And you can also set the direction to be long only if you set that to true. Here's the monitor. It just gives you information about the trade setups. So there's 4 sections here. We've got the long, the short. If the trade has triggered, this gives us information about the live trade. And then this is invalidation information. So if a trade started to set up but then got canceled, this will tell us right here is our long, tells us information about the last long that was invalidated. And this tells us the last short that was invalidated, and some of the triggers that can do that. So if we close on beyond the opposite Keltner channel, so for example up here, this is the Keltner channel we broke. If we closed down below the Keltner channel here, that would invalidate the setup. Setup expires, like I mentioned, after 10 bars. So in the pullback, if we get more than 10 bars, it'll cancel it. The retrace overshoot, so if we get too far on the other side of the Keltner channel, so this 20%, if we get outside of that, it'll just it'll cancel. And then if we get too close to that pivot point, like I mentioned before, 30%, that will cancel it. And then the other one here is this pullback eclipse, which that's basically looking at the size of the bar. So here in this example, we've got the pullback happening. Our largest pullback bar, so this, if it's larger than any of the previous uptrending bars, then we would immediately cancel the setup as well. So that's essentially just saying, okay, we're expecting it to continue to go up, but if we get a large bar down, we're just going to get out of the trade right away. I'll just show you a screenshot of what this live monitor might look like when it's actually triggering a trade. So you can see they just start to turn green as it forms, tells us our pivot information, how far into it we are. This one we were 2 out of 3 bars in, and then here, okay, we're actually at the formation, we're 7 out of 3 bars, so it's ready to trigger, and did we hit the middle of the zone? And yes, we did. So the trade triggers once it breaks through the high of the previous bar, and then the reverse essentially for the short side. So that's essentially my full strategy. It could definitely add some additional items in here to make it a bit more complex, or I guess smarter. But it's got the basics of the trend following and taking those triggers. Yeah, so that is it. Thanks for listening.